Welcome to the Commercial Property Podcast. My name is Suzi Carter. I am a chartered surveyor. I've been involved in commercial property in the UK for 30 years and I've done hundreds of commercial property deals. I'm here to be your guide through the commercial property market, whether you're an experienced investor or whether you're literally thinking about dipping your toe in the world of commercial real estate. I will be here talking to you about all kinds of things commercial real estate in the UK, and I've also got some fantastic guest experts who are joining me. So please do subscribe if you'd like to follow, and if you'd like any more help or information on commercial real estate, please do click www.suzicarter.com, which is my website, and you can find out all the ways I can help you. So stay tuned for this week's episode. Welcome back to the Commercial Property Podcast. And today we're going to be talking about how businesses buying their buildings or selling their buildings can profit both them and investors. And this is, I think, quite an overlooked aspect of commercial investment that certainly newer investors don't think about, because ultimately the occupiers of commercial property are businesses. And if you think about how many different businesses there are in the UK and the world indeed today, then you can think about how many different types of commercial property there are. And profitable businesses will have excess profits that they may well want to invest in their premises. And, you know, a lot of business owners will invest in their pensions, in their SAF, in their SIP, or just buy the property in their business. And in terms of profitability, there's obviously a benefit in terms of not paying rent to a third party and also seeing capital growth over time. So today I want to talk to you a little bit about that, about how businesses can potentially profit from commercial property investments, and also how investors can take advantage of this as well. And I'm going to split this into two categories. So first of all, I'm going to talk about buying, and second, I'm going to talk about selling. So number one, in terms of buying. So let's look at it from a business owner's perspective right now. So you have a property where you are occupying it, or perhaps you want to occupy it, or perhaps you want to grow your business and get a larger premises, or perhaps you want to downsize your business. You also have profits in your business, you have a pension, and, you know, but you're paying rent to a third party. It makes a perfect sense. In many cases, not every case, obviously, there's always exceptions, to look at the potential of buying the freehold or the long leasehold of your building. The benefits in terms of not paying rent to a third party. So obviously that's a cost that's immediately taken out of your business, but also in terms of, like I just said, in terms of the capital growth that you will potentially have over the years. Now, obviously that isn't guaranteed. And this is where we talk about niching a lot in terms of, you know, if you've got an industrial building where there's a fair amount of scarcity in that market, then the potential of you getting capital growth over time seems pretty good. Obviously, it's kind of horses for courses. If you're in a market where perhaps there's falling prices, like in some retail locations, then it may not make as much sense. But obviously, you need to assess that. So it kind of needs to work as a property deal. But a lot of business owners work on a payback. So even if it's not the best property deal in the world, if you can, you know, if you're going to be paying £50,000 a year rent and you're buying a property for, say, 500,000, then it potentially makes sense because of the payback, where you're going to be able to get a 10-year payback. You've got a longer term business, and you know, also you can get repayment mortgages as well. So you're paying down the capital value, and then you have an asset at the end of it. Your business has benefited because that cost of rent hasn't been going out, and there's a potential you've either paid down the debt or you've just got to pay back over time because you haven't been paying rent. So for several businesses, many businesses, that makes perfect financial sense. And obviously, there's different ways you can structure that. You can put it into your business. A lot of business owners do it in the pension. You can do an opco-propco structure. What that is where you have an operating company, the opco, where you're operating your business, and then you have a propco, a property company that is leasing that property to the owner-occupier, who is your business. Now, just some things to be aware of with that. So there are some challenges with potential challenges with lending, not always challenges, where banks will valuers like to have arm's length transactions. What that means is that they like to have a landlord who lets to a third party that isn't related, because that is true open market evidence. If it's a related party, you could be giving yourself a favourable rent or favourable lease terms. And so whilst it's tempting to do that, if you need to get finance on it, you may be affected, because the valuer will see that the evidence on the subject property, or on the property they're valuing, isn't probably the best evidence, because it's not an arm's length transaction. So look at the comparables, still go through the process you would if you were letting to a third party. Then just be aware that if you choose to let at a preferential rent, there is a potential you're going to have a hit on value, but you may still be willing to do that, because the benefit to your business might be greater than the benefit to your property company. So there's just a bit of a dance you need to do between these two to work out where to lie. And so as long as the comparables kind of lines up with the price you buy for the property, with the rent, you should be okay. But obviously speak to a broker very, very early doors on this. Just make sure that you're structuring things correctly. Make sure a solicitor's doing your lease agreement. No informal agreements here between the property company or the pension and the operating company. That can create all kinds of issues. And not least that if you ever want to sell the property, you need to make sure there's a proper lease in place, and also make sure you speak to your accountant, because obviously tax structure is really important here. So obviously there's tax benefits of receiving money into a SIP or a SAS, which means that it's income tax free, capital gains tax free. But can you get as much lending in those vehicles? Usually in a SAS you can get 50% of the pension pot, and therefore, is there a potential challenge there? So there's all these things to weigh up. That's why kind of get a valuation early on as well. Just make sure you're doing your due diligence before you set this structure up. But it can be a fantastic vehicle for businesses to buy their own commercial real estate. Now, here's the thing. For investors, this can also be an incredible opportunity. So if you buy a site that maybe is single let's just say industrial for the sake of argument, you buy a single site that you can then multi-let. You can split it up into various different units. I've just been having this conversation with a client recently where they bought a site. It's a mixture of offices and workshops, and there's quite a large workshop as well. And there is always a potential to do title splits. What that means is that you can split the titles on entry, or you can split the titles later, and you can sell parts off, or you can finance parts differently. It just gives you lots of flexibility, especially if it's a multi-let site. So in certain parts of the country and for certain types of assets, so for example, smaller industrial units, I know for sure in many parts of the country, there is quite a strong owner-occupier market for all the reasons I've just talked about earlier in the podcast. It makes sense for businesses. If you're going to be paying 25 grand a year rent, but you can actually buy a unit for £250,000 and you've got money in your pension, or you've got profits to spend, it does start to make sense to buy your operational property. So investors can take advantage of this by selling to owner-occupiers. And I've got clients who are buying certain types of property where there is just such a great market for selling out to owner-occupiers. In fact, agents are saying to them that literally owner-occupied units are going in days. And it doesn't have to be industrial. There's certain retail units where occupiers would just prefer to own it. And the math just makes sense. So from an investor point of view, if you want to If you want to get profit very early on in your deal, if you want to get profit from day one, indeed, you can actually sell part or maybe even whole of the property out to owner-occupiers who will be willing to pay a global price for the property because it makes sense for them. And it can be a really nice way of getting your money out of property deals, because you are effectively, you're kind of getting your deposit out by selling on. And of course, that can also work on mixed use buildings. So we're not talking about businesses here, but if you've got commercial units on the ground floor and you've got uppers, which are residential, already converted, you don't necessarily have to convert them. But if they're already converted, then you can title split the flats. They usually have to be over 30 square meters to title split them. You can either put them on buy-to-let mortgages, or you can sell out one or two to get your money out, and then effectively you've got no money in the deal. And I've got plenty of clients doing that strategy at the moment, and it's working super well at the moment, especially from a financing and a structure perspective. Now, obviously, you're not selling out to businesses, you're selling out to residential owners, but the principle is still the same. Obviously, every time we buy a property, we want to look at multiple exits. So let's, not making that the only path, but, looking at a rental path, looking at a sale part, looking at a sale of part, looking at asset management. If there's development, looking at that later down the line as well. Multiple exits are crucially important with regard to commercial property in particular. So owner-occupiers wanting to buy commercial real estate can benefit both investors and it can benefit the businesses themselves. So, I think it's quite an overlooked part of property investing, in terms of, I think that we all think, we've got to hold assets for the long term, but there's plenty of people that trade commercial property. They trade them through agents, they trade through auctions. And one of those prime, especially for smaller units or where there's a sweet spot where agents tell you there is a sweet spot of owner-occupiers, then you'll find that there can be some quite nice competition for those assets. And what's interesting is when I've been bidding on some smaller types of property in the past, I've actually been outbid by owner-occupiers because they're actually willing to pay a bit more because of this kind of maths I've talked to you about in terms of the capital value versus the rent. So don't be surprised if owner-occupiers sometimes come swooping into a location because they trade from that location. They want to buy an asset in that location, and they can sharpen their pencil a bit more because they've obviously got this added benefit of not paying rent versus, just the pure investor mindset. They've got a business mindset on it as well. So something definitely not to be overlooked when you're looking at commercial property. So if we're looking at owner-occupier selling, that is potentially another opportunity for both businesses and for investors. So a lot of businesses will want to own their properties longer term, but some will want to need to sell out their commercial properties that they occupy and they trade from. Now, there's different ways or different motivations why businesses may want to do that. One might be that they have to, there's circumstances meaning that they have to. Perhaps it's that their business is closing. And this is where business sales can be very interesting, because my experience is that some business sales do have undervalued commercial property in them. And therefore, the commercial property is just undervalued on the balance sheet, perhaps hasn't taken into account kind of asset management plays going forwards, and therefore, a good opportunity for investors to maybe look at businesses with commercial real estate. Obviously, you have to want to be running a business as part of that, or, feel confident in closing the business down or whatever you want to do with it. So there's kind of buying commercial properties as part of businesses. There's obviously also distress. So, businesses may need to sell their commercial property. We saw this a lot during COVID, where a lot of businesses wanted to recapitalize, and they had assets, they had freeholds that they owned, and it made perfect sense for them to sell those assets. Now, we'll talk about how some of those structured them in a minute. And then there's kind of the business owner retiring, the family taking over the business and, deciding they don't want the freehold. They're all kind of opportunities. There is distress in commercial sales, and that can be, again, always wanted to ensure a win-win for both parties. That can be an opportunity for both the seller and the buyer as well. So definite opportunities in that space too. Some businesses may want to recapitalize their businesses, but may not want to leave their trading premises. So they own their own freehold. They don't want to leave their trading premises, but they want to recapitalize and sell the freehold. And, selling a building may be the way to do that, rather than having to get a bank loan, or, kind of, again, a benefit for businesses in owning a freehold, that if you did need to sell, I mean, we all know that property isn't liquid. So, there will be a marketing period. It depends on the different sectors, different locations as to how fast it will sell. But ultimately, you have an asset that you could sell if you ever need to. But sometimes a sale and leaseback is the answer. And what a sale and leaseback is where a commercial owner who runs a business from their commercial premises will effectively want to keep trading there. So they will sell the property, but they will take a lease back. And that can be a great opportunity for investors to buy a property with an occupier already in place on a lease. Now, obviously, the devil's in the detail here. People like Next did this during COVID. And institutions bought their property with a long lease into Next. That's a institutionally acceptable asset class. But not all businesses have such good covenants. Not all businesses just have such a great trading history. A lot of small businesses will try and do this. And obviously the checks and balances you do as an investor, if you're going to have that business as your tenant, then you absolutely need to be doing checks and balances on that business.
This episode is brought to you by Bond Finance Limited, your trusted partner for commercial property mortgage solutions. Are you an experienced residential property investor about to diversify into commercial property, looking for funding options? Bond Finance can help. Whether you're planning to expand, refinance, or make a major property investment, Bond Finance provides expert advice with access to a wide range of lenders, from high street to specialist. Book a free discovery session today to explore how we can tailor commercial funding solutions to your unique investment strategy. Visit www.bondfinanceltd.co.uk and take the next step in your commercial finance journey.
You need to be working out, the longevity of that business, look at their trading accounts, making sure that you see if they've got any problems looming, really getting under the skin of it. And by the way, you do this with every tenant that you're letting a property to. It's not just a sale and leaseback. But the difference in a sale and leaseback is that quite often you're paying top dollar, or you're paying more money for the privilege of having a tenant in place. And you can almost sometimes you can almost write the lease terms with them. It's like a partnership. So, I'll pay you $100,000 more if you take an extra 3 years on the lease, or something like that. And not always you can do that. Sometimes a selling business is very clear about what they will and won't accept. But if you're paying top dollar for maybe a slightly longer lease or a better rent or whatever, you need to make sure that tenant's going to be around in a few years. So I've got clients, and I've been doing, had these circumstances myself as well, where you are buying an investment, and then the owner-occupier who's selling, comes along to you and says, well, look, can I stay in there for a couple of years? Actually, I'm not quite ready to wrap my business up, or my new premises isn't quite ready. And sometimes that could be the best of both worlds, because you can get the tenant in short term, but you've got asset management to do. Obviously, you just need to think about your financing in that circumstance as to whether you get term finance, or whether, and you can certainly do that if you've got a tenant who's signed a longer lease, or signed a lease rather for a couple of years or a year, or whether you go on bridge, and then it gives you the ability to do some asset management. Maybe you want to subdivide the unit once that tenant leaves, Or maybe you don't actually want them to stay at all. Maybe you say, look, I've got this asset management to do. I just want to get on with it. But sometimes there's a real benefit rather than going on to bridge and then doing some lease management or subdivision or letting a vacant property and then going on to term finance. Sometimes there's a real benefit in having a business in there on day one and then going on to term finance for a couple of years and then doing your asset management later. So it just depends on how quickly you want to get your money out and kind of how you look at that particular investment. So, this is always about starting with the end in mind. What's your objective and how can you achieve that? But as always, when dealing with tenants, it's all about building relationships. It's all about making sure that you really get under the skin of the business, yes, but you also build a good relationship with them because, at the end of the day, commercial property, when I started out 30 years ago, was landlord versus tenant. Now it's truly a partnership. You need to partner with your tenants. And certainly I would suggest with a sale and leaseback, that is probably the biggest partnership that you'll be looking at in commercial property. So businesses buying commercial, fantastic opportunity for businesses. It doesn't have to be owner-occupier businesses as well. You could buy investments with business profits. And I work with a fair amount of business owners who not only want to buy their operational premises, but they also just want to buy investments because they want to park their cash in commercial because they can see the benefits of the yield and the capital value increases later, but also kind of potentially benefits for both parties when owner-occupiers are looking to sell because there's opportunities coming to the market. There may be different levels of motivation with that, but there's also potentially sale and leaseback opportunities. So definitely don't ignore these owner-occupiers. As a business, definitely don't ignore commercial property because there may be a real opportunity for you there. And if I can help in any way with that, you can reach out. We'll put the details below. And just a little plug, if you don't mind, the big commercial update is back. This is a full-day online, totally free conference with loads and loads of guest speakers. It'll be chaired by me, and we'll put the details below, but it's coming back in November. It's totally free to register. It's a full day, 9:30 till 5:30, and I'd love to see you there. So have a great rest of the week. And if you're looking to work with tenants, make sure you keep it as a partnership, but definitely look for the opportunities in that space.